All right, good morning, everybody. This move was a little unexpected. There are a lot of people that are caught off sides, and that could provide a little extra push this morning. It's going to be interesting, that's for sure. I have a pretty light economic calendar today, but we're already doing the unusual. Typically, when there's going to be the FOMC minutes, we see a sideways market through the morning while we wait for that report. And that is absolutely not what we have going on right now. So we're we're already approaching it from an idea or from a point of view that says this isn't how it normally goes. And that's fine. There's nothing wrong with it. We just have to recognize it right off the bat. And that's hard for new traders because you don't know what normal looks like. So now you wouldn't know what unusual looks like. So this would be an unusual situation. You want to just put it down in your notes, kind of keep track of it. You know, that when we have the FOMC minutes, which is really just a more detailed look of the FOMC meeting that we've already had, generally speaking, we get a nice consolidation, a tight range through the day, waiting for those numbers or waiting for that report to come out. So that's not what we have. We also have PMI numbers today, really important numbers. Those two, and then there's your typical Fed speakers and whatever. And it was brainier yesterday that sent the market to the downside yesterday afternoon, and we've been seeing that continue with the bond moves. The dollar was the best indicator yesterday. It was between that and XLF. That's what I was watching while trading the S&P yesterday, and it worked just absolutely beautiful. When I kept looking for news, everybody kept asking me, why is this falling yesterday? There really wasn't any news, nothing that was, you know, highlighted and pointed at until later in the day. By the time that later came, it was too late. But if you were watching the XLF first thing yesterday morning when we popped to the upside and then flipped and dumped, that was your warning. That was your indicator. The United States blocked a bond payment of Russia's this morning, and the implications of Russia defaulting on a payment, we don't even know how bad that's going to get. But it is absolutely a part of this whole situation. So keep your eye on the dollar. That's why we're looking at FX Street this morning. They usually have this nice little excerpt about the dollar. It's free. You don't need to buy anything to come over and look at this. Some mornings it's not this dude, it's some other person that posts, and they don't always cover the dollar. But just a quick glance. That way you can see what's on the agenda for the day, and you can get a little bit of background on the dollar. And if you haven't heard me say it before, when it comes to the dollar, we have to have the why behind it. Right? We can't just have, quote, a strong dollar or a weak dollar. We got to understand, why is that dollar bid up, or why is it fading off? So for today, we have 10 o'clock and 2 o'clock. There is a petroleum status report, and due to what's going on, in the energy sector, this could be impactful. Generally, in a normal market, it's not. So I won't discount it today and say that, now we don't need to worry about it. We absolutely should keep our eye on it, just because of the current situation in the energy market. If you're looking for a go-to trade on Wednesdays, USO is directly connected to this and very often responds when the report comes out. USO is kind of a cheaper product. It's got really liquid options. It's fun. It's a great thing to trade. So, set an alert. You can just right click, create an alert, and give yourself like a 10-minute, 15-minute heads up, and then watch USO and look for an opportunity to trade. All right, so like we usually do, we want to game this out in advance, kind of start asking the questions, what's more likely? before we get there, let's just step back into a higher time frame. I don't think day traders do this enough. Good to look at where we're at, right? Just go out to the daily chart, look around, kind of ask the question, are we going to hit anything? Are we moving towards a major moving average, or are we moving away from a major moving average? Type in the word daily, and you can see that there is a daily SMA. This indicator will allow you to plot a higher time frame moving average on a lower time frame chart. So we could be on, say, a 5-minute or a 15-minute chart, and we can still see the 50 period or whatever daily moving average. If you are on a broker that doesn't have this, then just go out to the higher time frame, use your drawing tool, mark where that daily moving average is, and then go back down into your lower time frame. It would accomplish the same thing because it isn't going to move as much as your intraday indicators will. We are now below the 10 period moving average on a daily chart. This is a little homemade indicator of mine, just asking a question, how far away from the 10 period moving average are we on a daily chart or a weekly chart? Each product out there has this distance, but think about it like a fence around your yard, right? Your dog can go out in the yard, it can run around all at once, it just has to stay inside the fence. That's kind of the way the price acts with its 10 period moving average. For the most part, it won't get too far away from that moving average before it either pauses and or reversing comes back. Well, that distance is different for every product out there. So if you use an indicator like this, you can look back and see where the average reversal was. How far away did it get normally before it makes that pause or makes that reversal and starts going back to the 10 period moving average? You can see that the S&P was behaving just like it should. It kind of went a little beyond the norm, and then that was that. It came back in again. Clusters of where it outruns and then comes back, outruns and comes back. It's what it does, right? Like swing highs and swing lows. So when we're seeing a market on the rise, we're trying to figure out where's the highest point of that rise. Where's the reversal point, the turnaround place? Same thing on the lows, right? When we get the swing low, where is the lowest point of that low? And it's kind of another question of, have we gone too far, too fast? Well, you can see from the daily measurement here, we're not even close to have fallen too far, too fast. We've got plenty of room to fall and still not be outside the boundaries, outside the fence. There's a lot of there's a lot of technical analysis that goes into a weekly chart on a 10 period weekly. So knowing if we're above or below it is a real big deal, but so much more than that. This isn't the forum for it, but a lot of trade strategies are focused on, are we above or below the 10-week? So when we come out to this higher time frame, just kind of taking a look around, draw any of your angular support or resistance lines, kind of look for any trend line breakovers, look at your major moving averages, looking for the answers to that question. Are we moving towards something or away from it? And you can see that we're moving towards the 50 period right now, right? It's still a long ways away. We're not going to hit it at this point. And we know from looking at that lower indicator that we just crossed through the 10 at some point. There's an indicator that you can load called moving average 2 lines. It's just 2 moving averages, right? But if you get tired of resetting the darn thing all the time to the 2 averages you want, just right click on it, duplicate it, set your moving averages that you want, name it something so that you can find it again. And there you go. That way you can load very quickly your moving average pairs. So we have the 200 period. It's a good thing we turned that on. because I did not know we just hit the 200. But that's why we come out here and look. A little tip: choose a color scheme for your moving averages and always use that color scheme. That way, when you see, say, orange, you'll know, oh yeah, that's my 50 moving average. Or if you see purple, oh yeah, that's my 200. It doesn't matter what color scheme you use, whatever suits you, whatever you like is fine. It doesn't matter. It only matters to you. But pick a set of colors and then always use that color. That way you can train your brain, just like we, teach kids colors matter. My 2-year-old grandbaby knows red and green, go and stop, right? So, I mean, train your brain to recognize those colors and their implications. It helps too if you're also jumping from different platforms. That way, all your moving averages are still the same all the time. So the S&P just got to the 200. That 200 went, it went right through it like it wasn't even there. That's impressive. It didn't respond to it at all. Certainly want to keep your eye on it though, especially if we begin to pull back a little bit. You can see that we are a long ways away from the pivot point, which is that purple line right there. This is what they call an MDP, missed daily pivot. It's a fully formed trading strategy, by the way. So it'll give you the opportunity to go find more about that on your own. You can see we had an MDP back here, and we didn't have the follow through that we would normally expect to see. But it's worth knowing what that strategy is. It's worth learning a little bit more about it. You see the cog line at 45.11 really held up, especially through the later part of yesterday. And then in the Globex, eventually it was broken. Persistence beats resistance. We did finally break through it. That 3 o'clock break yesterday was right on time. It was perfect. It did exactly what it was supposed to do. Saw it coming, gave out the alert, the heads up in advance. That's why we watch the clock, guys. That's absolutely it right there. So let's game it out and do the same thing that we normally would do. Ask the same questions. 3 scenarios. We could stay sideways. We can continue this move to the downside, or we could reclaim all the way back up to the top and then go beyond that. Not likely, right? So right now, everybody's caught off sides. Everybody thought that was a solid bounce into the close. You can rest assured that right now there's a lot of people that are just getting squeezed and they're just in pain mode, right? So a lot of people are off sides. We want to look for a reaction to that as we come into the open. Remember that you got the dollar and the bonds opening. Then we've got our economic events. We got the RTH open. So from our current situation, we're down nearly 1%. Want to be able to ask the question, what's the average daily range right now? 1.84 is the average daily range. So we've already taken 1%. We could easily get another 1%, and it would not be considered an unusual move. It wouldn't even be considered an aggressive move or extreme. So at this point, we're not outside the boundaries of what normal looks like. We'll just add another 1% from our current location. And that would put us at around 44.35. Kind of hard to see that, isn't it? Hey, that's better. So on the way down to get to that target, there is the weekly expected move low. Definitely want to pay attention to where that is. 44.51-ish, right around 44.51, 41.52. If we look at the point of control from yesterday, it matches today's point of control spot on perfectly. They're overlapping each other. So that's interesting. You always want to note that, just be aware of it. There was an untouched point of control at 44.91, but that has now been touched. So it's no longer something that we need to be focused on, but it was worth noting. Look at how price responded when it got there. So it was just doing its thing, bebopping along to the downside, nice clean grind. It got to that point of control, paused there, pulled back, struggled with it a little bit, and then finally broke through it. Now, it could just be random, right? Sure, absolute coincidence. Or it could be that that was an untouched point of control that if we had carried it forward when price revisited that untouched point of control, there was a reaction in the market. We've had the reaction now. We don't necessarily need it, but I've learned that when we hit things like this in the Globex, we don't necessarily want to take them off yet. Leave it on and see if we revisit that area in the RTH session and if there's going to be any sort of reaction at that point. All right, so I'm going to leave it there for now, but we did respond to it, and there is another one at 43.60, but I mean, I don't think we're going to get that far today. If we look at the volume profile for the 10-day, 30-minute, you can see that we never left the range, right? We kind of set a high, pulled back off of that, and we've just had this really ugly, slow grind to the downside. Head and shoulders target was met, right? That 50% mark. So interesting enough that, patterns still work even in this chaos and madness. We are outside the box. If I get rid of all these scribbles for a moment, you can see that we're outside the box and we're continuing to move lower. It goes right back to what we were saying on the daily time frame. Ask that question, are we moving away from something or are we moving towards something? In this situation, we are moving away from the area that we should be inside of, right? Normally, price is supposed to be in that box. And when it escapes the box, we expect to see it come back in again. And instead, there's still a nonstop pressure pushing us farther away from the box. It takes a lot of persistence to do that. Sorry, I got distracted for a second. All right. So that's the downside move. What else could we get? Well, we could reclaim the fall, basically the zone between the Globex high of last night and our current low. That would be the most likely outcome, right? That we come back inside of that range from 45.30 to 44.70, and we just hold that range all day, or at least until the minutes come out. It's the most likely outcome. The third one would be that we make our way all the way back up to 45.30 and then make it outside of that for a topside breakout and we start flirting with yesterday's levels. It is possible, but not very likely, right? Almost, we don't want to use the word to say it can't happen, but it's just very unlikely to happen, right? What's most likely in a situation like this is that we continue to the downside until something changes our trajectory. Well, that's a word first thing in the morning. That could be, the open of the dollar, the open of the bonds, the econ, the PMI numbers. So let's take a look at the Nasdaq. This one's down 1.5%. So it's down more than the S&P is down. You want to do the same thing. Come out to the daily chart first and just take a look around. Ask that basic question. Are we moving away from something or are we moving towards something? You can see that we're underneath the 10 period moving average and we're moving towards the 20 period moving average. If we go in and add that daily SMA again, we can put the 20 on there since we are moving towards that daily 20. And we can put the 10 on there since we did cross through that 10. That way, when we go into the smaller time frame, we'll be able to see those levels and see how the market responded to it, right? So like back here when we were interacting with the 10, or back here when we were interacting with the 200, really helps to be able to ask that question, are we about to hit something? Is there anything in our way? Or to be able to answer a question like, why did the market suddenly turn around right there? Out of all the places that it could have turned around, why did it turn around right there? Oh, it hit something. Right. Okay. I got it. So we're moving towards the 20 period daily moving average. It's underneath this. It is a little more than 1%, one and a dime. We're already down 1.5. We could easily move another 1.1%, and that would put us at our ADR right now of 2.6. So that 20 period SMA from the daily time frame is today's ADR level. That's your downside run. Want to take that over and look at the volume profile, kind of ask the question, is there anything that we could hit? Mm, it is interesting to see that there was absolutely no help from this volume shelf at 14,625. We ran right through that thing like it wasn't even there. That's how aggressive and how steep this move is right now. That's a little bit shocking, actually. It's impressive. So beyond that, there is one more at 14,525. Considering how easily we breached the last level, and we are now in a shallow area where there is no support, we can move through shallow areas very, very fast. We could very easily punch through 14,525. The thing is, though, everything has a measured move. And while price can go beyond that measured move, typically it doesn't do that lightly. It would take some really bad econ coming out to push us into, say, a 3 or a 4 standard deviation move. Like a z-score of that magnitude has happened before, but they're not as common. We're also moving away from the box, right? Asking that same question, are we moving towards something or away from something? And if we were to look back from 14.6 and see, was there any point of controls around that area that we may need to be um, aware of and maybe keep our eye on? There's a point of control here at 14.8. That's way over our head at that point. We don't need this one anymore. But we'll just use that line and carry it. There's another untouched point of control at 14.5. That one is in play. So we definitely want to know where that point of control is. Just come back over and see where we're at now. Yeah, there it is. So that's an untouched point of control at 14,521. there's very likely going to be a reaction in the market if and when we get to that level. So we want to game it out, ask those questions. What's more likely, that we're going to continue this move to the downside, making a 2 or even a 2.5% move, or that we start to stabilize, that we get the dollar open, the bonds open, then we get into RTH and we get the PMI numbers, and we maybe start to stay range bound at that point and or begin working our way back up towards the top. That's more likely, right? In the grand scheme of things, that would be the more likely scenario. But keep your eye on the news. It's really important. There's a lot of things going on this morning. One of them is that bond payment issue. Off the cuff, I didn't get to read the article yet, but off the cuff, the way it looks is the US told Russia, you can't make your payment with US dollars. You're going to have to make your payment in some other way. And of course, they've sanctioned everything. So the ruble is not something that they can use around the world. Their gold is sanctioned. They can't use that. What are they supposed to use? Well, Bitcoin's on the table, I guess. This is just a really unique situation. We don't exactly know what the outcome or what the implications are for such sanctions that they're putting on. And they're not done yet. They're talking about ramping up sanctions yet again. So we're in a very precarious situation. And then, we have the Fed yesterday chipping their teeth. They're very likely going to continue that today. And things could get a little messy. So let's keep our eye on our levels and just trade what we got. So that covers the S&P, covers the Nasdaq. Let's take a look at everything else. So we had that magnificent move in the dollar yesterday. The sharp, steep drop yesterday was the spike at the open. And then the dollar flipped over and ran that thing back up. And that was the pressure to the downside on our market yesterday. And when we went into the close and this thing was no longer open because it closes at 3. So when the dollar went into the close at 3 o'clock yesterday, that's when things really started to get out of control. The dollar and the bonds closed at 3, gave the shout out, hey, watch the clock at 3 o'clock. We got the potential to really break down and start making some serious moves. And that's what we got. It's not because some person with a crystal ball that I knew what was going to happen. It was just looking at the clock and realizing that, hey, the dollar and the bonds have been impacting our market all day today. And when we go into the close, it's very likely that when those two markets went into the close, it was very likely that the lack of them being open was going to even exaggerate the situation. And that's what we got. Right? It's just kind of asking that question again, what's more likely? And gaming out the scenario. We do have the VIX futures back above $23, $24 now. Want to keep our eye on this. I did 20 videos on volatility. I don't want to nerd out on you guys this morning, but think about this sentence and then I'll show you how to fix it. When we're looking at SPY, we can look at volatility. When we're looking at Apple, we can look at volatility. When we're looking at the VIX, which means when we're looking at volatility, how are we supposed to know how volatile this is? Right? When we're looking at SPY, the volatility indicator tells us how violent SPY is right now, right? What's the level of volatility in SPY? We just look at the implied volatility. We can ask the same question. How violent is Apple right now? How volatile is Apple? Well, when you are looking at the VIX, how volatile is the volatility index right now? You can't just go out and put on the implied volatility indicator on this. That doesn't make any sense. Can't do that. But there is something called the VVIX. This is basically uh, an implied volatility indicator for the VIX. And you can see that the volatility is beginning to pick up. So we're getting back into levels of extreme volatility. Now, if you're looking at it from this perspective with this small of a chart time frame, we're on a daily chart, you may think, oh, well, we're at the lows. This isn't violent at all yet. Yeah, but you got to realize this is a 1-year chart. So when we back up a little bit more and we look at the way things were before COVID, we normally stayed below 110. Like it was our default nature to stay below 110. And when we did peak above it, rarely when we did, it was like, oh wow, hey, we're getting into some very extreme stuff. And then COVID hit, right? And then after you got a benchmark of over 200, anything else does seem kind of low. But when we cross that extreme volatility level at the 110-ish, right around in there, we're getting into some very violent volatility. So in the VIX right now, the VIX is more violent than it normally is. This is a way for you to be able to gauge that. One other thing worthy of taking a peek at is skew. Again, this isn't the forum. This isn't the place to teach what skew is. You just want to look at it and ask, what's going on in the skew right now? Is it decreasing? Is it increasing? If it is increasing, by how much? Where are we at in our levels? So you can see I haven't been on this chart for a while. Our record high was at 161.85, and now it's way beyond that, 169, right? So we're sitting near the midpoint in our skew, but look how much the skew is changing since mid February, right? So Valentine's Day, maybe 1 week after Valentine's Day, we've been trending to the upside. The skew has been increasing, and this might not seem like very much of an increase. That's a serious increase. That is an absolutely significant Godzilla size increase in skew. If you're an options trader and you don't know what this is or don't understand this, you're so handicapped. It's like you're in a room wearing a blindfold and everybody else who's in that room with you is not wearing a blindfold. So we can see you, we can see what you're doing. You can't see us, you can't see what we're doing. That's how screwed you are. So if you don't grasp skew or haven't really looked into skew yet, now you have something to go look at, right? Something to go learn up on. All right, so we want to take a look at the sectors this morning. Natural gas, oil, energy. Energy has been my go-to trade for the intraday since like late January. Energy and finance, energy and finance. It's really been the name of the game. They've provided trading opportunities every single day. There's always something in there to play. It's been good. So it's worth looking at again today, especially if we start to get some reversals in the USO. We're already up 2.5, almost 2 3/4. It'd be nice to run that thing all the way back to zero on the day. Uh, Gold is flat. Now, when I'm looking at these sectors, I'm really looking to benchmark that we've moved at least 0.5%, right? We want to see that we're down 0.5% or better, and or we're up 0.5% or better, right? If it's only a 1/4% or a third, it's not really enough. So across the board, almost exclusively, we're bearish. Hey, it's not a surprise, right? Like, thanks, Captain Obvious. Think I figured that out. But you want to watch this as we go into the open and see if these numbers start to decrease. If we start turning this around in the other direction, oftentimes we do more than one thing at once, right? We can chew bubble gum and walk at the same time. You won't just see a decrease in the names that are up. you'll also start to see an increase of the names that are down. And a lot of times that's the first, right? It's the first step. So really kind of keep your eye on the sectors overall and start to see what's begin that push. Because if we're going to get a reversal, it's very likely going to happen in either growth or value, right? It's going to very likely be in one direction or another. Right now, it's across the board. Everything but energy and metals is down, basically. It's not even worth looking at the chips. We know they're down. We want to go take a look at something like crypto because we don't quite grasp how much crypto has changed the game, right? I mean, crypto's been around for a long time, but not with its level of participation that it is today, right? It's a national currency now. It has the backing of the banks and the institutions. Like it's a different thing, and we still don't grasp all of the different ways that it's going to affect us. I had someone ask me the other day, "What do I mean by that?" Think about how much research they did in SPY when they gave it 3 expirations in a week. They made that change and they watched it for a decade. For 10 years, they watched it and studied it and looked at the effects of what they did. Like, you know what I mean? Like they looked at every tiny aspect of it and they watched it for years and just looked and said, what effects is this going to have on the overall marketplace? One of the effects is it gave us the most accurate product when it comes to expected move out of everything that's out there. That was an unintended consequence. They didn't know it was going to cause that. When it comes to something like Bitcoin, we can assume that we have an idea of some of the things that it's going to affect, but we don't have a clue about everything that it's going to affect. And a lot of it is just look, watch, wait, and see. Record what we get, come back and look at it again later on and reevaluate. Causation is a very odd thing to study. So, it's worth just keeping an eye on. If you are in the nerd circles when it comes to economics and the things that affect economics and the little buttons and knobs that they can turn, you'll realize that there's an ongoing running argument that's lasted, over a decade on what we can do, what we should do, what the ramifications are for the things that we do. They don't know, guys. They really don't know. There a lot of times they're just like pushing the button and asking them, well, let's just push that button and see what happens. If that doesn't scare you, I mean, I don't know what to tell you. The EV market is down this morning. Crypto is down this morning. One other sector that often does its own thing is the pot stocks. And we got some green in there somewhere, right? We got Tilray in there, Cara. So a couple of names. I'd be watching for this, see if we can, which side is off. Because if we've got about a split here, half of them are red, half of them are green, and by a significant amount. So either one particular subsector or sub-industry is doing good, or one side hasn't got the message yet. So all these that are down are going to flip and go to the upside, or all these that are up are going to flip and go to the downside. It's not guaranteed, but that's what I'd be watching for. And that would be a play on the day, especially since a lot of these are cheaper names that you can do with stocks and options, right? Kind of put the two together, and you have a lot more trade opportunities way beyond that binary choice of winning and losing. Was just talking about that earlier this morning when somebody said that SPY caught them off sides because they had just bought a call yesterday, thinking that, as we were going into the close, that it looked like we were going to rally back up and, buy a call. It seemed like a good idea. I'm sure that wasn't the only person. And they're now off sides, right? They went long and they're getting kicked right now. But it's an options trade. So if you went long yesterday and your options trade is now on the wrong side, flip it over. You're not in a binary market where it's winning and losing. It's we can win, we can lose, we can trade long, short, sideways, volatility spikes, time, trade all of that, or a combination of any of that. So don't just close the trade as a loser. Think about how you can convert that loser into a winner. Yeah, you like it. All right, so we're on Trading View. If we want to look at the heat map, it's just a short quick way of looking at what's going on. Set this to the pre-market. We're on the S&P 500, but we don't want 500 names, so we want to drop that down as close to 100 as we can get. It's a little hard to do, by the way, so um, I wouldn't fiddle with it too much. Adjust the color scheme so it's more responsive, and gee, imagine that everything is red. But we're looking at almost 100 names at a glance. When I first seen a heat map like this, as a new trader, I thought, what a worthless piece of junk. Who in their right mind would use such a childish, silly little thing like this? Oh boy, was I wrong, right? It was just at first impression, this does not compare to things like charts with candles and indicators and lines and drawing tools. And this just seems very childish and immature and generic and worthless. But that is not true, not even remotely close to being true. You're looking at almost 100 names here, and at a glance, I mean, I can see the fangs, we can see individual sectors, we got strength, we got market cap by weight and size, I mean, everything, all of it right there at a glance. These heat maps are absolutely invaluable tools, and they give you a chance to witness what's going on in all of the marketplace, not trying to pick and choose one or two names and burying our heads in the sand and missing what's going on around us. So if you don't use a heat map at all, consider adding it to your toolbox. There's a lot of different ways to access a heat map. Thinkorswim's got one, um, FinViz Pro, TradingView. There's a lot of them out there, right? Something to think about. So we can see all the FANG names are down: Facebook, Google, Microsoft, Apple, Amazon, Nvidia, Tesla. We've got names that are down at least 1.5% or 1.25% with Google, but we've got names that are down over 2% like Tesla. A couple of names that stand out, of course, energy, but Lockheed Martin stands out a little bit, right? Boeing, Raytheon, Lockheed Martin. Now, Raytheon slightly down, Lockheed Martin up nearly 1%. So just kind of taking a look around financials. There are a few financial names that are either flat or sideways. And then we've got some names that are down significantly. Remember, when it comes to looking at sectors, subsectors and sub industries really tell a better picture, right? If we just say finance, that's very generic. What kind of finance? Insurance companies are lumped in with finance. We wouldn't want to mistake something happening in finance just to find out later it was Aflac, right? Credit cards, lending institutions, regional banks. What kind of finance is finance? Swap this over to the Nasdaq 100, pre-market change percent, no filter required. All we got to do is adjust the color scheme a little bit, and you can see yet again we're in a risk-off situation. Very red. G, not much of a surprise, right? Nvidia is down nearly 4%. Yeah, baby, just getting murdered out there. Love it. So let's dig a little deeper. I mentioned yesterday that a part of the morning briefing is being able to ask a very specific nuanced questions like how many names in the S&P 100 are down at least 1%. That's a benchmark number that I really keep track of. 30 names are down 1% or more this morning in the S&P. That's 30% of the S&P is down more than 1%. That's a good bearish number. It's not slightly bearish, it's just straight up bearish, right? And that's where a lot of these people are going to be caught off sides. When we're looking at this, we don't want to just see the names that are on the list. What do they represent? What sector, subsector, industry? Do they have a daily chart set up that I'd be interested in playing? Now, after something's already made a really big move, I don't like to try to jump on and hope it's going to go even farther, right? So when we're at the lows, I don't sell to go lower. When we're at the highs, I don't buy to go higher. It's not my style. It's not my nature. So these names that are already down a significant amount, I wouldn't necessarily be approaching them thinking they're going to go down even more. They absolutely could, but what's more likely? After a market has already moved 2, 3, 4% in one direction, it's very likely going to go back in the other direction first. So that's the S&P. Well, what about the Nasdaq? 43% of the Nasdaq this morning is down at least 1%. When you can quantify this on a daily basis and you get familiar with the numbers, when you come in and see this at, say, 65, 75, 80%, when you see 80% of the NASDAQ is down 1% in the pre-market, damn, that's bearish, right? That gets your attention. There's different strategies that we use depending on how much a particular index or sector is down or up. In these, we want to look at the risk on, risk off, and midline sectors, get a gauge for what's driving the market sector wise, which ones aren't participating in what the overall market is doing, and where's our trade, where's our opportunity. Remember, the starting point is 0.5%. So in the NASDAQ, how many names are down at least 0.5%? 54 names. So half the NASDAQ 100 is down this morning, at least 0.5%. That's pretty bearish. Remember that the NASDAQ and the S&P are really differentiated by one distinguishing characteristic. The NASDAQ 100 does not have financial names in it. The S&P does. Now, Thinkorswim doesn't do a really good job with pre-market stuff. Change percent basically is where it really fails. So you can use a little bit of a code to kind of get change percent, but that's really why we go to things like TradingView and TrendSpider in the morning, just because Thinkorswim just really doesn't do a good job with that. The financials are absolutely going to be something you want to pay attention to this morning a lot, right? The financials, it's all about the dollar and the bonds right now, and their impact in the financials is going to be the impact that goes into the S&P. You want to keep your eye on the S&P and the Nasdaq. We've been getting a bifurcated market lately, and on a day like this, we're very likely to become a correlated market, a market that's moving in sync. That is the most dangerous kind of market you could ever come across. Bullish or bearish, when everything syncs up, it can become very extreme. So if we're bifurcated, it's actually good news because we're getting a market with a split focus. Want to make sure that we're actually looking at two-sided trading activity. That's just a really fancy way of saying that we see a market that's going up and down, not just moving in one direction. So if you take a look at something like, say, the SPX yesterday, right? When we started dumping after that 3 o'clock close, this is a 5-minute chart, 5, 10, 15, 20, 25 minutes. We had nonstop one direction trading. This is one-sided trade activity, right? One time framing is a well, it's a phrase, something worth looking into. We want to see two-sided price action. We want to actually see the wave between the swing high and the swing low, right? That two-sided price action. There are a lot of red to green setups this morning that right now does not have the follow through. And oddly enough, Apple's kind of lagging behind in the volume this morning compared to something like Nvidia. It really got my attention this morning that Nvidia had more volume than Apple in the pre-market. That was a little bit of a surprise. You want to get familiar with those numbers, right? What's a normal morning look like? And the reason for that is Thinkorswim does a really, really bad job with something called relative strength. So if I was trying to get an answer like, well, what's the average volume in Apple in the pre-market in the shares? Thinkorswim isn't going to give me a good answer. But if I get used to looking at Apple every morning in the pre-market and looking at what its average volume is on a day-to-day basis, I will learn the average, looking at it day after day and realizing, when every day at around 8 o'clock, looking at Apple, it's got X amount of volume. Oh, that's its average morning volume. So that when it's above that, it should be significant. Generally speaking, volume's lighter when we're rising and it gets heavier when we're falling, generally. So when that's not true, when we actually get a large amount of volume in that breakout, when we are ripping the new highs or breaking out to new highs and we're doing that with elevated volume, that's why elevated volume stands out so much, right? Because generally we get the elevated volume when we're falling. But it's worth taking a look at what's going on in the FANG names and recognizing that yesterday, going into the close, the FANG names were offering a perspective of red to green. So we had that trade set up. Now, since then, we've fallen even more. So, it's unlikely that we're going to get the follow through that we were expecting. But it was there yesterday. Could have swore I had a chart already made. There it is. So you can see that red to green setup. We have red to green, and on a lot of these names, we had inside day. So that's two different daily trade signals. I trade an inside day or an inside day breakout, and I trade a red to green. So those are kind of like my two go-to in the pre-market when I'm looking around, seeing what's moving, what has an opportunity. But we no longer have that red to green setup because we continued to fall last night. So that's off the table. But it was on last night. It was something we were going to be looking at this morning. What we have now is an inside day breakout to the downside in a lot of these names. Now I went short yesterday in Facebook, and I actually had someone reach out and say, "Why did you short Facebook? It's got a really strong relative strength." And that's true. It did have a really strong relative strength. But if you look at Facebook, it was better positioned for a fall than the rest of these. Nvidia had already fallen really far. Tesla was near the low of that previous day's candle. All of these other markets were already near the low of the blue candle from the day before. But Facebook was still sitting really high up on the day yesterday, relatively speaking. So I picked that one out of the list, right? Rather than picking something like Nvidia, which had already dropped and broken below, had an inside day breakout. I don't want to short from the lows, right? So we shorted. Well, I shorted. If anybody followed me in it, it should be working pretty decent this morning. Yep, golly gee, it's down. So, hey, everybody, that's it for me. I'm going to wrap it up here. I will be streaming in the large caps this morning, start around 9:15, and we'll see if we can find some opportunities to trade. Be careful, be safe, and I'll see you all tomorrow.